Hi, everyone, and welcome to another episode of Investing Beyond Mutual Funds. For those of you who may be joining for the first time, my name is Medha. I'm the founder of Wealthup. At Wealthup, our goal is to help you make smarter financial decisions by understanding what financial products are right for you in your financial journey. And today we're going to be talking about not, I guess, one financial product, but essentially something that a lot of people are very interested in investing in, which is real estate, but not the traditional way of investing in real estate. So I'm pretty excited about this topic or conversation today because when I did a simple Google search, I wasn't able to find a lot of information about digital real estate investment. It's just that this is such a new and upcoming field. Even here in India, there's so much that is evolving and things that are moving, that a lot of content is still being created around this topic. And today we have a very special guest who's going to help shed some light on, what has happened so far, what are the opportunities that are available, and where do we see the trends going. But before all of that, let me first call on Ankit, my co-founder at Wealthup, to introduce himself, and he's going to be leading the conversation. So, Ankit, over to you.
Hi everyone, this is Ankit. I'm a founder of Wealthup along with Medha. My background is I am an engineer from BITS Pilani, and after that, I was working as an investment banker with Swiss Bank, UBS, initially in Hyderabad and then in New York. Then I came back to India and I found an opportunity, a need for helping people with taking financial decisions, and that is why me and Medha we came together to start Wealthup.
Thanks so much, Ankit. And now I'd like to call on Avinash, and I'll let Avinash give his introduction and talk about, something very exciting that he's building, in the space of digital real estate. Okay, Avinash, over to you.
Hi, Ankit and Medha. Firstly, thank you both for having me on your channel and on your podcast. It's lovely listening to both of you. I remember meeting you a while back, and with the kind of plans that you have, I'm so happy to see young people like you really take up such exciting opportunities and start developing them. So it's uh, very nice to see this happen, and I'm very happy to be on your channel. So thank you once again. Uh, so introducing myself is I like to introduce myself in many different ways, but today, given the nature of this discussion, let me start off by saying that I've been a salesman all my life. Right, I started off selling branded computers long ago. I think maybe when Ankit you were not born also, probably. But I started selling branded computers long ago, maybe almost 30 years back, 35 years back, and then moved on to selling insurance. Then my first real job was of being a suitcase salesman, selling space in yellow pages. You know, there used to be a thing called yellow pages. There used to be a phone directory, and there used to be yellow pages. Many would not relate to the fact that there used to be a phone directory, and people used to actually remember phone numbers and look at yellow pages for business listings, etc. Those were the days when Google didn't exist. Forget Chat GPT or anything of that sort. And then I moved on to telecom. I spent a lot of time in telecom. I spent about a decade or so in telecom. I was with organizations like Reliance. I spent 8 years with Tata Teleservices in the B2B space. Somehow, once you start off as a salesman, most people just say, okay, now you're good in sales, you're going to be remaining in sales. So I did all this through and through in sales. And then I headed the business unit in Karnataka for Tata Teleservices in the enterprise space. Did reasonably well, spent almost a little less than a decade, 8 years over there. Moved to real estate. My first stint in real estate was in Knight Frank, where I spent about a couple of years as the regional head for the region of southern India. Then spent a long time in Purvankara, heading Provident Housing and Purva Land. I was there for almost 8 years. So yeah, in this 2 decade professional career of mine, I had two long stints, where I spent 8 years in two large organizations, and maybe very big organizations in their own industries, right? And at some point in time, we said, okay, enough is enough. Now let's do something that really excites us, and do something that could make a potential difference to how things are, and could make to break the status quo in some form, and bring something really innovative. So he said that real estate is being bought in a particular manner for all these years, and there have been various forms and shapes that it has taken. How would it be if we enable people to buy 1 square foot at a time, right? How would it be if we enable people to actually invest sitting in Mount Abu and invest in a property in Bangalore? How would it be to suddenly take a hyper local asset class and make it accessible to everybody in every nook and corner of the country? So that is how the idea of Alt DRX was born. And as the name suggests, alt as in alternate investments, and digital real estate as a marketplace is what is the big idea behind Alt DRX. So we've been at it for the last couple of years. We launched the platform and we started taking we started onboarding people on August 15 of last year. And so far it's been exciting. It's taught us a lot of lessons, and as most startups do. And we've been able to cater to a large population now. And we're very happy to where we have come thus far. And we are excited, very excited about where we can go in this journey.
Great. Thank you so much for sharing the entire background and how all DRX came into existence. Now, a few questions around what you had shared about what you're doing now, Avinash, and we'll start with the basics. So, first of all, we understand what is real estate. It's like growing up, we have seen it makes a lot of sense. A lot of, particularly, the previous generation, we have seen that our parents' generation has invested a lot of money in real estate, and they made very good money as well. Now, there are challenges. Since then, a number of things have. Like, if you think about today, like where we are, the prices, the hassle, and all of those things, and which has made investing in real estate challenging due to number of reasons. Earlier, it was like for, I mean, to a large extent, our parents were also like they was essentially kind of born in the city and working there and sort of retiring there, so they know the city, and they are physically present. Managing real estate is much easier because they have the network and whatnot. And for most of us, like we are born in one city and education is somewhere else, and even for job we move around and stuff. So because of which, investing in real estate has become challenging the traditional way. But what you are doing is digital real estate, right? So first thing that I would like to understand in very simple terms, what is digital real estate and how is it different from the traditional real estate?
Okay. So I think you summed it up well. So real, I mean, what is real estate? End of the day, there is a land and there is a building, and uh, people are buying a space, right? They're buying a space in a large city. So you're taking a piece of earth and saying, this earth belongs to me now. So that is what is the process of actually owning real estate. So for a very long time, and even today, it's true that real estate has been a very localized, it's a hyper local decision. So when people want to buy homes, they will buy homes they can see, touch, feel, or buy even commercial office space. They will want it to be within the city, close by, so that they know that it is in a particular location. So that has been the traditional form of buying as well as investing in real estate. So what we are trying to do, and what digital real estate basically does, is it democratizes ownership. It makes a hyper-local asset class suddenly accessible to across the world and across every spectrum. When I say world, I don't use it loosely. I mean, yes, Indian real estate can only be bought by Indians today. But if you're living in, if you want to own real estate today in Singapore, it's possible. You want to own real estate in Dubai, it's possible. You want to own real estate in the United States, America, it's possible. So it is possible. We are global citizens. Why people do not invest is because they don't know the location, they don't know the kind of developer, they don't know the nature of the city, they don't have information. In digital real estate, what basically happens is you have enough and more information that is required to take a decision. What is the information that is required to take a decision? Uh, what is this micro market like? So I'm able to provide that information to the investor. This is the micro market like. Uh, who is the developer of this product? What is the developer's background? What is the valuation of this property? How is this valuation of this property going to move over a period of time? So the more transparent it becomes, the more easier it becomes for decision making. The same way today, when you are investing in mutual funds, when you are investing in the stock market, a lot of information is available to you. The stock, I mean, simple things like 52-week high and 52-week low is available to you, for example. The face value is available to you. So your decision making becomes simpler, easier. Same way, in digital real estate, uh, information becomes readily available. A lot of information becomes available. And then the most important thing is, because you're investing in a fraction, you're not necessarily putting yourself going through the entire process of figuring out where the asset is located. Then you have to buy the asset, then you have to do a due diligence process, then you have to go and register it. So all these things that you have to do in the conventional form are not required to be done when you're doing it digitally. You come onto the platform, you see the opportunities that are available, you go through the information that has been given, you read the due diligence report, you read the report. Say for example, an IPC has done a detailed micro market analysis and shared with you. The accredited valuer has done a valuation report and shared it with you. And then there is information as to what the price was a little while back, what the price is today, what the price is going to be tomorrow. So suddenly you have all this information. And then you you also have the ease, because I like to invest in Bangalore's land opportunity, for example. So I can go and invest 50,000 rupees. I don't have to buy the 1200 square foot. Now I can invest 50,000 rupees in a portfolio of plotted land in North Bangalore, close to the airport. Now suddenly I'm participating in the Bangalore story of real estate without necessarily going through the hassles that accompany uh, traditional buying processes. Now, the fact still remains, traditionally, it is a very successful asset class, right? Close to 3.5 lakh homes are sold in the primary market every year in the country, in just 6, 7 cities. So there is a lot of interest in each of the big cities, the 7 big cities, 8 big cities in the country. But now this just opens up an opportunity that anybody living anywhere in India can invest in Bangalore, can invest in Pune, can invest in Gurgaon, can invest in Mumbai, MMR. So suddenly, digital real estate is now democratizing ownership and enabling people to make an informed decision. They're not making a speculative decision as such. They're making an informed decision. So and so is the developer. This is the location of the product. This is how the product's pricing is going to has moved in the past. This is how it's going to move in the future. The due diligence report, that is both the legal and as well as the physical due diligence, is done. So all this information combined together is now an opportunity for an investor to take an informed decision. So this is what happens in digital real estate. And you can come and with a click of a button, log in, give your Aadhaar, give your PAN, add your bank account number, and then actually transact, right? And say after say 6 months, 1 year, 2 years, 3 years, 4 years, you see, okay, now I want to actually come back and maybe, sell these 50 square foot which I have. I don't want to be invested with this 50 square foot. Okay, you come and place that order on the platform, and the platform then figures a way out to liquidate your position. So suddenly what was illiquid is now becoming liquid. Suddenly which was not easily accessible has become accessible. Suddenly which involved a lot of paperwork is crunched. So now, just like how you would have taken a decision of evaluating a mutual fund product, whether I should invest in X mutual fund scheme which is focused on mid caps, or in a flexi cap fund, you can evaluate that on the platform as well. So this is how it is changing. So you don't have to build to own and live. Now you can actually, no need to buy to own or live. You can basically just buy and hold to invest, just like how you would do it in the stock market. So this is the big change that digital real estate intends to bring about in the marketplace. I can't hear you.
I'm sorry, I was on mute. Thanks for sharing all of this, Avinash. Okay, so guys, Avinash used a term IPC, that stands for International Property Consultants. These are the experts in real estate, international experts. There are primarily 4 of them, which are like very well recognized, and they are the ones who are primarily known as IPCs. Correct me if I'm wrong, Avinash.
Yeah, you're absolutely right. I shouldn't have used the acronym. They are international property consultants. They're well renowned internationally. A couple of them are even in the Fortune 500 list, and they do a lot of good work.
So yeah, that's what IPC is. Now, you mentioned Avinash about democratizing and fractionalization of it, right? So if you can just quickly throw some light to what it actually means and how it happens, how it works.
Okay. Uh, so think about this, right? There was there is the Earth, and then there are countries. Fundamentally, countries are fractions of land mass and
Right.
rivers and sea, ocean, etc. Okay. So there is a division that has happened, and these are the fractions that have got created. So this is one extreme example. But fractionalization is happening from time immemorial. For example, the day when you own an apartment, when you owned an apartment, what had happened was there was a piece of land. Say there was 1,000 square foot of land. On 1,000 square foot of land, 5,000 square foot of building came up, and that 5,000 square foot of building was given into small lots of 500 square foot, and everybody owned an apartment. Now that was fractionalization. So that fractionalization is not new. Fractionalization is not something that has just come up uh, yesterday or just after COVID, like how people tend to believe that has happened. That's not how it has happened. Fundamentally, what is happening today is it's a far more refined version, meaning that till yesterday, uh, some of these real estate opportunities were available only for a select few. Now, when we say democratize, now you can actually fractionally invest in a grade A office space or a grade A residential space without having to shell down a large sum of money. Meaning, earlier, if you had to invest in, say, a grade A office space, you would have to shell down somewhere in the region of anywhere between 2.5 to 5 crores. Today, that is crunched, it's come down to 25 lakhs. Similarly, if you had to shell down, I mean, you could not invest fractionally into the residential space. There was hardly any such opportunities available, hardly any opportunity to invest fractionally in the plotted land space. Now there is significant opportunity available in these spaces also. So if you want to own uh, own a small fraction in the Bangalore plotted land investment opportunity, or you want to own a fraction of a holiday home, meaning I don't want to buy a holiday home. I want to enjoy the returns of the holiday home. I want to enjoy a stay in the holiday home. I want to enjoy the fact that I can now have access to a great holiday home in Wayanad or in Goa. Now, when such access is provided to you at, say, a sum of 10 lakh rupees, suddenly it becomes so much more accessible to the entire world, right? I mean, everybody wants to go to Kerala and enjoy themselves in a holiday home. Everybody wants to go to Goa. Now, if they were to look at the opportunities available earlier, they would have to go and invest, say, anywhere between 60 lakh rupees to 5 crore rupees in, be it in Kerala or be it in Goa. Now you don't need to do that. You can just invest 10 lakh rupees also, get the benefit of rental returns, get the benefit of capital appreciation, and get the benefit of even stays in these places. So, by democratizing and fractionalizing, what we are doing is that we are enabling people to start investing at a lower ticket size and in high quality real estate, which which is uh, being made available because it is now easier for people to identify the opportunities that they have. Like, I can identify a Goa opportunity, I can identify a Kerala opportunity. I can choose which opportunity that I want to invest in. I can choose whether I want to invest in plotted land in Bangalore or in plotted land in Hyderabad. And by virtue of that, and by virtue of reducing the ticket size, the market is getting expanded.
So what is the reduced ticket size as of
Meaning,
now?
you can start investing from 10 lakh rupees. Erstwhile, you had to invest 50 lakhs to 60 lakhs if you wanted to participate uh, in a holiday home opportunity. You still had to buy an apartment. The apartment would go on lease, and then that apartment would give you rental returns because a lease manager was managing it. But then ultimately, you would have to shell down 50, 60 lakh rupees. Today, you don't have to do that. Today, you can shell down 10 lakh rupees. Subsequently, at in with something like us, you can even own 1 square foot. So when you can own 1 square foot, at that point in time, the opportunity, I mean, the ticket size comes down further. It comes down to
Hmm.
10,000 rupees. So now you're participating in the opportunity. You may not get a stay because 10,000 rupees cannot get you a stay, but 10,000 rupees enables you to basically invest now in holiday home opportunities, invest in growth opportunities like, say, Hyderabad land opportunity or a Bangalore land opportunity, or it enables you to invest in, say, Bangalore's rental housing opportunity. So suddenly, what was not accessible has become accessible.
And
So
just what you're saying, Avinash, it becomes very in the purest form of an investment. Like if I
yes,
am, say, buying a share of a company, say Reliance, it doesn't give me the option to go and take 5 liters of fuel from any of the Reliance stores, right, or Reliance petrol pump. But it's purely just the investment. Howsoever the company performs, I'm getting the benefits of that performance. And similar to that, if I have invested, say, bought 10 square feet or 100 square feet, whatever the number is, it's just pure whatever, howsoever the particular property, that asset performs, I get benefited from that. And just with
absolutely.
fractionalization, the minimum amount of investment that is required comes down to like a really small amount, very similar to how, say, mutual fund is, right? 500 rupees the minimum that you kind of need to invest. Similar to that, this has been brought about. Great, thank you. Now, in terms of the digital real estate part, has the evolution been in our society, in our country, and where are we, and with the tech platform like yourself, uh, how has the evolution been, and what's driving this evolution?
So it's phenomenal. See, India as a country, right, embraces technology far faster than many countries. We don't seem to look at it like, uh, pagers are still alive in some parts of the world. You can't even think of a pager in India today. The mobile phone, I mean, we moved into 5G far faster than anybody else. So adapting to technology, I think there is uh, a lot of salience when it comes to adapting to technology. A lot of people take to technology very easily. So we don't see a problem with technology. We don't see a problem with the fact that people are very conversant. They come online. They know how they can get their Aadhaar. They can link their PAN. They can do all that very easily. They are not worried about which OTP will come from where. So all those things they are very well aware of. The important thing is, technology is an enabler. What is important is when they come on the platform, what do they do? How do they understand the education required around that? Like you rightly said, uh, just because I own 50, I mean, I own 50 shares of, say, I'll give you another example. I own 50 shares of a distillery. Say I own 50 shares of, say, UB, does not mean that I'm going to get 15 to 20% discount on the Johnny Walker, right? It doesn't mean
Yeah.
that I'm going to do that. So, or I'm going to get a case of beer bottle free every beer case of beer bottles free every year. That doesn't work that way, right? But when UB sells a lot of beer bottles and cases of beer bottles, I get a dividend, and I see the capital appreciation of the organization, market value of the organization go up. In the same manner, fractional real estate works. So, given that understanding is not easy for people to understand, because they've seen real estate move in a particular way. They've always seen real estate saying, "Ki, theek hai, today it is 5,000 rupees per square foot. After 5 years, it will become 7,000 rupees per square foot. After 10 years, it might become 12,000 rupees per square foot." So this is the kind of evolution that they have seen. And then they'll say, okay, to sell, it's easy. It's very difficult to sell. It's very easy to buy, for example. I mean, it's difficult to buy also, but it's more difficult to sell. These are the kind of problems that they faced in real estate. Now, to say some of these problems are getting solved, this is how they're getting solved. They have questions, and then their questions are valid. How do you address those questions? How do you educate those people? It's all a process, right? It has taken almost 2 decades for mutual fund sahi hai to reach where it has reached today, right? It has taken a lot of work for mutual fund sahi hai to do for people to start investing. And the kind of the last I heard, you can correct me if I'm wrong, the SIPS contribution every month is touched 21,000 crores, and the net mutual fund contributions are some 30,000 crores. So 2.5 lakh crores a year. That is the kind of investments that are coming in to the market. So it's phenomenal, right? But it has been a long drawn out consistent process. Consistent, I mean, People have kept on saying it's good to invest in mutual funds. Please invest in mutual fund. There are market risks. So we are doing the same thing, but like I told you, we have taken baby steps, right? We're just taking baby steps. So we have a long way to go where we can reach to a larger audience, educate them. So they also appreciate the fact that okay, it is really possible, and this is how I'm going to go about doing it, and this is how I can actually create long-term wealth for myself. And so yeah, so traditional forms have to give way to new forms, and all that takes time. Technology as an enabler is a fantastic thing because it just cuts away all the problems with respect to reach. Suddenly everybody on a mobile phone can actually access my platform, go on, do whatever they want, right, on the go. I mean, if you're in the metro you can do it, if you're sitting in the cab you can do it. But education is very, very critical, so that's what we're working on right now.
Avinash, we'll be a little, we'll move forward a little faster because
Yeah,
I do
sure,
have a few important questions,
sure.
to ask. So now, when we talk about, investing in digital real estate, I want to understand what are the risks associated, and be it specifically associated with digital part of it or the overall real estate, as it has been. What are the risks associated when I'm going specifically via digital real estate, and how is it that these risks can be mitigated?
Okay. The most important thing that people should be aware of is that uh, they shouldn't think about lofty returns. Generally, the sense is my ticket size became smaller, so my returns are going to be lofty. That's not going to happen. So there is a nature of an industry, there's a nature of an asset class. That nature will not change dramatically. You have to stay invested for the longer period of time for you to see good returns and sustained returns. So generally feeling that, okay, now I have invested 20,000 rupees. So when I exit after 6 months, it will become 40,000 rupees. That's not going to happen. So that is very, very important for people to know, very important for investors to know. The other risks are all risks which are with traditional real estate. So, say for example, we don't invest our investors' money uh, into under construction assets. The reason being that under construction assets come with not just market risks but come with risks of delivery. So we invest only in ready assets, so that ready assets with OC, so that that risk is slightly mitigated. Now, over a period of time, there are return risks which are market risks. People should be aware of market risks. They should not think that market is only going to move one way. Market can move sideways. Market can move up and down. So people should be aware of these risks when they come and invest, whether it's in regular real estate or digital real estate. The other risk with generally
Uh,
speaking,
just a
uh,
quick pause here. So OC is occupancy certificate, which means the property is ready to be occupied. I mean,
yes,
all the
very good.
clearances has been received,
Correct,
right?
correct.
Please go.
There are typical risks, right? You invested in a holiday home thinking it'll get occupied for 60% of the time. Now it gets occupied only for 30% of the time. For example, suddenly there is flooding in Kerala. The traffic of number of people has gone down. Suddenly people are not going into Kerala because of such calamities. Then there is going to be a risk that your fund flow, if you had said you're going to get 6%, 7% return, has come down to 2%, 3%. So they should be aware of such market risks. Uh, then there are smaller risks where people would
How about the
expect
litigation risk, Avinash? Generally,
low, very low,
sorry.
very low. Litigation is very low. Reason being, once it's ready, once an asset is ready, and once you're investing in a grade A asset from a good developer, litigation risks are very low. But you cannot, I mean, I'm saying they're low, but doesn't mean it's totally ruled out. There can be litigants for all kinds of reasons, but fundamentally there won't be litigants for saying this land, I own this land parcel, or this apartment is mine, and those kind of risks will not be there, or there is a hypothecation on the apartment and which was not known, so those kind of things will not be there. So there are always
I'm thinking of very traditionally, like generally speaking, the way people think about traditional real estate key, and of course the kind of the movies that we have seen with cases, and of course, partly it is inspired in a way from real incidents that have happened. So, and it sits in our memory when we are thinking of taking such decisions. So like when I'm thinking of buying a real estate, like a physical real estate, like the entire piece of it, not a fractional or digital route, a key concern is ki by litigation, legal issues that are there, if it is there or not, any kind of encroachment that may happen or not, because particularly when I'm not in that city, when I can't. So like for the digital real estate, it's like if I'm not able to see this property, is it actually really mine? I mean, is it that I'm really the owner of it? Of course, on paper, but on the other side, also on the possession side, because of course I'm not living there. So
Yeah, I mean, valid question. But see, what you're talking about are risks attached to. So let's. I'm not taking developer names because it's not right. But I'll give you just let's take an A grade developers. Uh, let's take land. An A grade developers plotted development land parcel of 20 acres in a city like Bangalore. It's got demarcation done. It's got compounding done. You've gone to RERA. There is a flow. There is a planning authority which has approved it. There is RERA which has approved it. Now there is everything in place, and you've gone and invested over there. The risk of litigation comes down dramatically. The risk of litigation comes down dramatically. Now, cut to the next. I mean, the similar location, but it's not a developed land. It's been sold to you by, say, a small housing society or something which has cut a piece of land and said, okay, now the risk over there becomes higher. So the choice is yours. Now you went and the grade A developer was selling it to you at 3,500 rupees per square foot, but you wanted to buy it at 1,000 rupees per square foot because the open land parcel outside that developer's compound seemed that much more exciting. So you put 1,000 rupees. Now, when you put 1,000 rupees, you knew the developer is selling at 3,500 rupees. So there is a gap. So the gap is the risk that you're taking. Now, when you take that risk, you should take it with your eyes open that, okay, I need to compound it. I need to get it measured. I need to make sure that there is no encroachment. I need to make sure nobody comes and says that sub-survey number, this is the problem. So these are things which are there. So people need to be aware of it. So certain people have larger risk appetites, hence they take those risks. Certain people don't have those larger risk appetites. So when it comes to say what we are doing, we will not buy that open land. For example, we will not go and buy a farmland. We will not go and buy uh, an apartment complex which is close to a lake bed. For example, I'm just giving you certain examples where you need to do your due diligence thoroughly. In India, there is a small thing. I mean, most Indian consumers will tell you, how do you know due diligence is thorough? They'll say SBI has approved it, for example. Now, that's a benchmark. So it's better that you go to SBI if you feel there is a fear. So having said all that, over a period of time, over the last 1 decade, a lot has changed. A lot of these things have changed because one, there is RERA, which is a good thing. Two, I think there is a great amount of knowledge that is available with consumers, and I don't think there's information arbitrage like it used to be earlier. Today, you are fairly well uh, informed about what you should invest in, where you should invest in.
okay, so now with any investment, risk is one side and the return is the other. People mostly focus on return, but I first of all like to talk about the risk. I understand the risk. Now, risk is something that we have understood. Now, in terms of return, suppose I am putting in some investment today. What is the kind of return? I mean, again, I understand this hyper local play, so there will be certain areas that will give you much better return compared to others. But broadly speaking, the kind of opportunities that I can get access to through this real estate, such real estate platforms, Alt DRX or otherwise, what is the kind of return that I can expect investing in real estate?
Okay. Uh, so there are three kinds of financial asset investments. Let's talk in your language. The safest is going and putting money in an FD. The next safest is going and putting money in a debt fund or a liquid fund, and the third, I mean, where the returns are higher, is putting money in the stock market, right? And in between, there is the mutual fund. So this is how you break up your asset classes typically. Uh, Real estate is a safer asset class. So real estate falls somewhere between this uh, a bond or a debt fund, I mean debt bond or a mutual fund, wherein it's better than FD returns, but not as high as the stock market's returns, like, because both sides are there, right? The stock market can go up and the stock market can come down, so you can really lose your shirt in the stock market. You're unlikely to lose your shirt in real estate. So real estate is an A plus B. That's like how my co-founder Anand also likes to talk about it, wherein A being rental returns and B being capital appreciation. In the residential space, A is not so high, B is much higher, but you can expect anywhere between, in the worst case scenario, 9%, 8 to 9%, in the best case scenario, 14 to 15%. So it is a safe bet to say around 11 to 12% returns over a period of 3 to 7 years is a fair assessment for anyone. So that is how they should look at their returns. Expecting supernormal returns is not a good idea. If it happens, great, but that's not the norm. The norm would be anywhere between 11 to 12%. That's a safe. There's a safety net, and the key over there is to know that uh, real estate is a safer asset class. It's not necessarily the highest return-based asset class. It's a safer asset class. Your money is safer in real estate than in many asset classes. It's as simple as that.
It's actually very, very good, Avinash, as you pointed out, where in terms of the risk return profile, where it actually sits. So that, of course, if you're taking lesser risk, the return will be lesser compared to, say, the equity market. And particularly, it's difficult for people to understand because how Indian equity market has performed in the last roughly 3 odd years. It's like everyone is like, 25-30% to very normal, hai, right? Which is not even the case in the equity market. Right? I mean, if you look at not just a 3-year period, if you look at like 20 odd years, if you look at, it's not, you don't get 25-30% kind of return. It's like 11-12%, 30%.
That's where people like you play a big role, right? Because people get swayed by flavor of the season.
Yeah.
So you're listening to all those stories about IPOs, your stories about SME IPOs, then how the small caps and mid caps are overcooked, etc. I'm just saying that where there is a rising tide, everybody thinks things will be fine, but we all know that there have been serious downturns, and there have been months and months and years where markets were not giving 8%, 9%, 10% returns as well. There are stocks which have been languishing forever. So I think it's very important for people to put this in perspective and understand that if you're getting anywhere between 11 to 12% returns in the long run, then it's a very good thing. It's a very, very good thing. If you're getting anything higher, it's fantastic.
Generally, when we talk about, say, equity, if you want to invest in equity market, mutual fund or direct equity, whatever it is, the mindset should be that you should be leaving that money for at least 3-4 years if you really want to see some return and if you want to make certain money. With, of course, liquid fund, there is no minimum. It's like even if you want to leave it for like 3 months, 4 months, 6 months, it's fine. So when it comes to real estate, getting into real estate, what is the timeline that I should have in mind? Whether if I'm getting an opportunity, great opportunity, I say 1 year's time, of course, I'll sell it out and I can move on. I can choose to move on. But getting in, what is it that I should be mentally prepared for? The time period.
Anywhere between 5 to 7 years, I think that's a safe estimate for you to see good returns. But let me give you an example, very nice example. This is a real life example. I met somebody who was investing with us some time back, and he told me that his uncle, where he lives today, bought a piece of land, 2,000 square foot, by paying 60,000 rupees in 97. 60,000 rupees in 97. He said today he's not selling it. He's not gone out to sell it. That's important. 2024, it is 3.5 crores. That is the valuation of that land today done by a valuer, and what the market has. The last transacted price on that same 2,000 square foot has happened. The longer you stay invested in real estate, the better is your opportunity to make supernormal returns. Not supernormal, but certainly higher returns. So the longer you stay, it gives you far better returns, far better returns. That's how you should look at real estate. Should not look at real estate with a 6 month, 1 year, 18 months, 24 months time frame. You can keep adjusting your portfolio to some extent, but anywhere between 5 to 7 years should give you good returns.
Another thing is ki, as we briefly use the term hyperlocal, right? So guys, what hyperlocal means is ki Bangalore, all the areas of Bangalore are not going to increase at the same rate, right? Certain areas will be say growing at 5%, certain will be growing at 15, 20%, 30%, right? So in order for in order for an investor to make better returns, Avinash, it's better that if you're able to identify though that hyperlocal area that is expected to outperform the overall Bangalore city, for example, or the very highly developed areas. How is it that I, as an investor, a small investor, say 2, 3 lakhs, 5 lakhs, 10 lakhs kind of number that I want to put in, how is it that I can identify the area where this higher a potential for higher return is there?
So that's difficult to do, right? Because by the time you identify and it's, I mean, it's already gone. The train has already left the station by the time you identified it, right? You should have invested it before it became uh, as exciting, or it heated up as much as it should have. So
So how
hence,
do I get there?
hence, you do what you've been doing traditionally. You diversify. So you look at somebody like us, come to our platform. Now you don't have to invest in one developer's plot or one developer's apartment or one area. You can now invest, you can put your 2 3 lakh rupees in, say, Bangalore prime land investment opportunity. Now I am going to invest on your behalf in 20 plots. So you're going to benefit from the fact that it is diversified. I've invested in multiple plots. As and when that plotted development, each of them will move differently, but as they move up, your uh, value of your holding moves up also. So that is one way of doing it. The other traditional way of doing it is uh, keep an eye out on how the physical infrastructure in any city is moving. And the physical infrastructure in the city will determine the kind of development that micro market will have. Fundamentally, there will be occasions where you will see certain micro markets heat up uh, far more than others, but it will always be due to a particular reason. There will always be a reason. The reason is usually uh, IT campuses being set up, the social infrastructure improving, the physical infrastructure in terms of municipality services like water, electricity, and various other developments that need to be taken up. They getting a bump up. So multiple things determine how a city grows. Uh, Highway projects, metro connectivity, all these are big pluses. But fundamentally, even in real estate, if you're able to diversify with a small investment, you're likely to participate in the upside far better than if you were to invest in just say one asset class.
So from that perspective, I mean, it's better to use a platform because again, I'm a busy professional. I have jobs. I have so many other things to take care of. So it's just better to use, a platform wherein experts whose day job is to take care of that key, identify where the returns are. And generally speaking, for any platform, it's in their best interest to give high returns to the clients or investors, so that investors can keep coming back. Now, of course, Alt DRX is a platform, doing just that, as you mentioned earlier. So, Avinash, for Alt DRX, one thing that you mentioned is like the minimum investment amount is determined by 1 square feet, whatever the amount is, 5,000, 7,000, 10,000, broadly, right? Now, in terms of the type of assets within real estate, what all do you offer?
So we are focused on the residential asset class. So we are purely focused on the residential asset class. Many people wonder why we are focused on the residential asset class, but the reason is very simple. Residential is the most, uh, I mean, uh, if you were to look at the residential asset class, for every 1 square foot of uh, commercial assets being built, there is about 6 to 8 square foot of residential assets being built in the country. So when I say 3.5 lakh homes are being sold, they're actually 3.5 lakh homes being built and sold every year in the country. So that's how large it is. So you do your math: 3.5 lakhs into 60 lakhs. What is the kind of size of that asset class? So it's huge. Now, in the residential asset class, because we believe that the capital appreciation in the residential asset class is unparalleled. Hence, we focus on the residential asset class. In the residential asset class, there are multiple sub assets. So there is plotted land, there is holiday homes, there is senior living, there is co-living, there is student housing, there is rental housing. So all these asset classes are available inside the residential asset class. So we work on building alternate assets. So for example, co-living is an alternate asset, student housing is an alternate asset, senior living is an alternate asset. So these are all opportunities. Holiday homes are uh, alternate assets. So all within the residential asset class is what we focus on. Our reasoning is very simple and straightforward, that it is the most important asset class in our country in terms of from a real estate standpoint, and we believe capital appreciation is an important and integral part of any investment, and which only I think residential asset class can offer.
Avinash, if we talk about the capital appreciation for quite some time, the prices were kind of flat. I mean, be it because of the oversupply of the apartments, and of course, like last, I would say roughly 2 odd years or so, 1.5, 2 years, particularly the biggest cities that we're talking about. As people started coming back, post COVID, coming back from their hometown to these bigger cities, the capital appreciation has been much faster. But prior to that, it was quite, I'm not talking about just the COVID dip when of course losses were there, but even prior to that. So going forward, what is the, again, roughly what is the number? Do you still believe that the residential real estate, because you have mentioned that the rental yield is going to be on the lower side, right? Capital appreciation will be there and enough to compensate and reach the 11-12% number that you were saying?
So as long as you are willing to stay invested for the long term, I believe the capital appreciation will play out well. It is so. What are the problems when it comes to capital appreciation? Number one is, I bought a particular plot of land or I bought a particular home, and when I went to actually sell it, I realized I did not get that 7 to 8% per annum return that I was hoping that I will get, because in that tower which you have, there are 100 homes, and if 20 people are trying to sell it, obviously there is a challenge in you being able to get the right price for that home. That is one. And the other way, at any given point in time when you went to sell your home, you also had under construction homes being sold, you had somebody else selling similar home somewhere else. So there is the sense of competition, so there are alternatives available, so there is no shortage of supply. And that is why generally what happens is people feel ki capital appreciation is not as good as it should be. But if you look at the last 4 years and you look at all the key markets, the 6 7 key markets, 6 7 key cities, all of them have seen significant increase in the per square foot realization across the board, be it Bangalore, be it Pune. If you see all the reports, I mean, I don't want to bias anybody's mind by saying this, but there has been almost a 15 to 25% uptick in the realization that is happening. There's also been an uptick in the cost structures, but there has been an uptick. Now, if you invest in, say, fractional real estate, you don't have the problem of selling that one unit. You don't have the problem of selling that one particular plot of land. You can now just wait and watch how the market moves, and over a period of time see your capital appreciation, because you're, number one, you've not really put in the 50-60 lakhs or 1 crore, number one. Number two, you put in those 3-4 lakhs, and the 3-4 lakhs has got diversified, and hence your opportunity to succeed is much higher. So this is one way of looking at it. And I do not disagree with you that when you go to sell your unit, whatever unit there could be challenges in finding the right price, identifying the right price, getting the right price. But so is the challenge when you go and try and sell your car. You do not get your right price. Whatever, I mean, there is always there is always a certain level of dissonance that is there whenever you try to sell. You are always feeling that you've sold it for a lesser price than you should have. So I think it's important to be very clear-headed as to what your expectations are in terms of returns. And if you stay invested in real estate for the longer period of time, then I don't think you will face this issue of lack of capital appreciation.
And just quick clarification on Alt DRX. Any pool that whenever I'm making investment, I'm investing in a pool of assets, not one single asset, right?
Making an investment into a pool of assets, yes. It's very similar to making an investment into a mutual fund.
Okay. And for your investor base that you have, what kind of investors, they're generally the profile in terms of age, maybe location, or howsoever you look at them. What kind of
Happy to
investors?
happy to share. Our average investor is a 38-year-old investor, and 85-90% of them are male. So they come from 36 different cities. The average investment size is approximately 2 lakh rupees per investor to 2.5 lakh rupees per uh, investor. The key is that they come from 36 cities of the country. We have about 7 opportunities available on our platform, but we have got people coming from 36 different cities. Many of them come from metros and large cities, and a few of them come from tier 2, tier 3 cities. But now they're enabled to basically come and make that investment. But yeah, 38-year-old coming from 36 cities, predominantly male, investment size of about 2.5 lakhs, and very very conversant with investing and very conversant with technology. We're not seeing people who are not knowledgeable, and very little difference between our token customer and our HNI customer, for example. Both are as knowledgeable and both understand real estate, both understand investing, both understand what are the kind of returns that they can expect. I think uh, quite quite discerning is what I would say these investors are.
It's actually a little surprising that 95% are male. I mean, that's quite
98. Yeah, yeah. I
It
mean,
would have been
that's that you have 16 crore demat accounts, and you can figure out how many are male and female. So there is a that I mean, it's dichotomous to some extent, but I think that is also getting addressed. I think it will get addressed over a period of time, but that's the nature of it.
And so you mentioned that in terms of two questions actually. Yeah, you
What is
mentioned
your mix of male and female amongst your customers?
more or less similar. Like I would say, not exactly 50-50, but it is 40-60, within 40-60 kind of range only.
We're going to figure
So
out. We should sit together and you can help me figure out how you got to that. So,
sure, sure. And you know what, Avinash, for us, many a times it's actually that more women are coming, ladies are coming, because I want to be in a situation where I am taking my own financial decisions. So far, either my dad has been doing it, my brother has been doing it, or my husband has been doing it. But I want to be in that control, and that is why I don't understand any of it. And many a times it was just because that uncle of mine, which my dad really likes, he has been advising, okay, you should definitely do this, and I'm doing it. And even I don't even have the actually I shouldn't use the word courage, because I do want to ask questions, but I don't even can't ask questions ki, what are you doing with my money and why are you doing what you're doing,
all
right?
that you said is true. This is exactly what we face. So yeah, people say, "Why? Oh, real estate. I've not bought real estate. Why should I invest in digital real estate?" For example. So these are all whatever you've just said is exactly. I mean, if I were to, it's like if there was telepathic, exactly what happens.
It's interesting. So that's the thing. You can hear me, right, Avinash?
Sorry, I missed that.
Avinash, can you hear me? I think
Yes,
some
I can
network
hear you
issue.
now.
Okay.
Yeah, but I can hear you
Uh,
now.
okay. So that's the thing. Now we see, a number of times, a number of women are, taking our services because they do want to take that decision, independently. Um,
Yeah,
so
very
yeah.
good.
Now, another thing that I wanted to ask you, you guys are roughly 1 year old in terms of the platform that you have created. So, generally speaking, how is the volume of the trade that is happening? Suppose if I've invested and I bought say 10 square feet of investment A, how much time it is taking generally for a investor to sell it on the by the platform?
So, I mean, these are initial stages. So typically, we have a 1 week cycle wherein we settle trades in about a week's time. But it can, at this point in time, I would say it takes anywhere between 15 to 20 days. But uh, it's not fair for me to comment on that right now because it is still in its infancy. It's still a market
Mhm.
going. So
Yeah.
it'll be it will not be it will not be right for me to say this is the time frame. We do want to achieve the 1 week time frame for settlement, but I would say that uh, there is some way to go before we can achieve that.
And I think even if 1 month is a timeline that you are offering now, because that's why mentioned it's roughly 1 year or so that you have a little over 1 year that you have guys been operating
Correct.
like a platform, like a marketplace. And with marketplace, that is how it is. Like as the buyers and supply and sellers, as the number of those number of buyers and sellers increase, the volume increases and the liquidity increases. So even if 1 month is something that you've been able to achieve, that's I think pretty good. But for such a asset class. Okay, another thing that I wanted to ask you, the people that you have seen, people who are investing, any trend that you have seen in terms of the investments that they are making, that anything that you have been able to identify, any trend?
So we are seeing clear trends. I mean, there is a lot of interest when it comes to investment in land as an asset class. A lot of people are very keen when they want to invest in land. So this sits well with our thesis that people invest in real estate primarily for capital appreciation. So that thesis somehow gets managed there. So there is a lot of interest in land. People believe that nobody's manufacturing land anymore. So please invest in land. It's going to grow. That's the sense that people have. Uh, the other thing is that there are a lot of young people who are coming and getting onboarded. Close to uh, two-thirds of our customers are pretty young. They're less than 40. There is another one-third which is less than 30. So there is a significant number of people who are younger and who are interested in making such investments. And the third key thing is we are seeing a lot of movement in the sense initially they were coming and saying, okay, I'll buy 2 tokens, I'll buy 3 tokens. Now they're coming and saying I'll buy 10. So then suddenly there is an uptick in the number of in the quantum of the investment. The quantum of investment from say 20, 30,000, 40,000, 50,000 is now moving up to say 2.5 lakhs. But
Mhm.
uh, that's a trend, and I mean that's also a function of the number of opportunities that we are opening up. So the more opportunities that we open up, the more users that we onboard, I believe that that ticket size will keep going higher, and somewhere it will
It's
stabilize.
also slowly, yes, also like that slowly as so when I invested 10,000 rupees and when I have seen that return, I will be, I mean, of course, based on affordability, if I'm comfortable putting in 1 lakh, and why not, right? So it's also the
Yeah.
trust that builds over time. So it makes sense.
And
And according to you, so the land is of course something that is like God is not making any more lands, so it's limited resource. So that's definitely an asset class within the residential that you mentioned. But apart from land, what other asset class is something that you see is interesting and well placed for next,
holiday
same,
homes is
5.
holiday homes is very exciting, and locations, specifically locations like say Kerala, locations like Goa, there's a lot of interest for people. Then we believe that uh, student housing as an asset class is very exciting. Rental housing as an asset class is very exciting. So these are all exciting product offerings, which people tend to believe that over a period of time will go up, and this is purely coming from the data that we are getting from the platform. So all these are interesting asset class opportunities. So say for example, Goa is very excited. I mean, Goa gets a lot of people very excited today. uh,
Mhm.
People believe that they really want to spend time in Goa, and Goa is like, I mean, if there's if Dubai is the destination for global real estate, I think Goa is the destination for Indian real estate. Everybody in India wants to do something in Goa. So that's how
Mhm.
excited people are about Goa. So Goa is truly location agnostic today. It's not
Yeah.
specific in anybody and everybody, from somebody from Patna to somebody from Bidar in Karnataka is interested in Goa. So it's all. So this
And I
is
think it's also the rise of Airbnb is also, and there's so many people talking about, okay, I have invested in an Airbnb property and managing, I mean, the entire property, few of them who have done it. A lot of people want, okay, I also want to like to have something like that, but of course I can't put in say 2 crore, 1.5 crore, 60 lakhs kind of number. So something like this should be interesting. I mean, I personally, I think we already had a chat earlier regarding land is something that I am personally interested in. I personally, I have bought just one apartment for my parents because they wanted one. But otherwise, apart from that, there's hardly any physical asset that I have bought. I mean, car is also something that I bought because I had a daughter. Otherwise, I'm like, I am totally into this digital asset, the paper assets, because
Yeah.
I want to be very kind of mobile, like that. So when a real estate opportunity is coming, investing in real estate via digital channel, I think it makes a lot of sense. And of course, when the ticket size is smaller, it makes even more. It makes it even easier and hassle free. So it makes sense. Now, what's new at Alt DRX? What should we be expecting in next 6 months to 1 year time? What's something, any interesting opportunity that you're working on, or
Yeah,
anything that
we are working on multiple opportunities. I think we will bring in a number of. I mean, today we are seven opportunities. We have seven opportunities live on the platform. I think in the next 1 year we will have at least 10 opportunities to 12 opportunities live on the platform across various segments: holiday homes, plotted land, rental housing, student housing. So across all these segments, we'll have opportunities which will be live on the platform. We will have. Uh, I'm sure we will have our app that will get go live, and we are going to come up with a very interesting campaign, and very interesting campaign, very interesting people who are associated with the campaign. I can't talk much about it at this point in time. Shortly you will see uh, quite a few campaigns that will go live from our end, which will basically talk about how it is how it is easy to invest in real estate. Okay. So my I have a young colleague who yesterday we were sitting in our discussion, and he came up. Basically he said, I mean, obviously our creative guys came up with it, but he added to it as invest fatafat, you know no jhanjat, invest fatafat. So fundamentally, so we are aligning our thoughts to the younger lot more, in a more understandable manner. So we're trying to come up with a nice campaign. I think in the next 15 days, you should see a lot of us. Uh, we should be there in a lot more spaces. That is one. Secondly, I think we are in the sandbox in Gift City. So that is something which we are very excited about. So we should be able to look at uh, uh, being the first platform to get regulated in the Gift City. That is Gift City in Gandhinagar. And we should have some in the next 1 year. We should also be able to allow Indians to invest in international real estate, and allow international I mean non-Indians to invest in Indian real estate through Gift City. So that is an opportunity. We are also looking at some international opportunities, but fundamentally this is what the next 1 year holds for us. So exciting times, and
very
look forward to many more people getting onboarded by virtue of this.
exciting. Thank you so much for sharing all this. Sorry. Thank you for sharing all this. Really helpful, and thanks for sure bringing and sharing, coming up and giving your time. Medha, do we have any questions from the audience?
No questions there, but Avinash, I had a question for you, right? So a lot of the people that are part of our community, they're essentially beginners in terms of their understanding of finance, but they're also many of them are starting out, like basically building their portfolios. So you already talked about where this sits in the spectrum of assets, right? But what would be your advice to someone who is maybe starting out? Is this something that they should consider investing in, or should they wait it out and first build a portfolio with more traditional asset classes? So, what are your thoughts on that?
My first and foremost thought is, please start investing. Don't worry. Whatever you want to invest in, start investing. Start with a 5,000 rupee SIP, no problem. That's the most important thing. I think don't spend your money. I mean, spend your money, obviously, but investment is also, I mean, investment is a habit, and it's a very good habit. So start investing. The way you should look at it is Say if I am a salaried employee who's making about 50,000 rupees a month, say, and if I should have the discipline to go and invest 20,000 rupees, and that 20,000 rupees can be broken up into many forms. Now that 20,000 rupees, uh, put 20% with us, put 80% with everybody else. So decide on your mix. So put some money everywhere, because your SIP is going to work for you for sure. Somebody is working for you to make you rich. Your FD is working for you, because the bank FD is a good instrument. The bonds are working for you. Put some money in real estate, because real estate also will work for you. So fundamentally, you don't. It's not an either or decision. I think it's a decision of how much money you want to allocate to us as an asset class, and how much money you want to allocate somewhere else. Important decision is that first I start investing, and then I decide what kind of mix I want to put in my investments. Only thing everybody should remember is your money should work for you when you're asleep. That's what Warren Buffett has said many a times. Now, when he said that, it makes a lot of sense, right? If you're asleep and your money is working for you and it is working hard for you, it's people like you, me, everyone who's working for the investor to ensure that they get a good return at the end of the day. So that way, I think investment as a habit is fantastic. It need not be either or. You can invest in today. If you can own 1 square foot by investing 10,000 rupees, why not put 10,000 rupees every 3 months and see where it goes.
Yeah, and I think actually you have made that possible, right? Because before, even for me to have, it was an either or, because I only had so much money, and buying a real estate property was a dream for a lot of people. Like, ek din, that will sort of happen, and people would
Correct.
sort of save to do that. And I think, I mean, this was a very, very interesting conversation for me, because the conversation largely has always been around like fractional real estate, and people have heard about REITs and InvITs and all of that kind of stuff, but really understanding that there are asset classes and there are other ways of digital real estate investment as well. I think that is something that we have never covered in any of our previous episodes as well. So thank you for sharing that, and it sounds very, very interesting. uh,
Avinash, I do have one more question. If you're done
yeah,
with
yeah,
it.
sure.
So, Avinash, say if I'm investing in a holiday home, the rental income that is coming, does it come to me to my bank account, or does it, is it like a dividend kind of thing? If I'm comparing
It
it to a
comes into your
mutual
bank
fund.
account. So basically, the holiday home performs. It's a performing asset class. So every quarter it performs. There's a P&L, and basis that P&L, you receive you receive it in your the rental income net of expenses that get credited to your bank account. The manner in which it is treated is not treated like a dividend. It's basically treated like a repayment of a loan in that sense. So that's how it is treated, because you are investing through an SPV, and that's why you basically it's complicated. It will take long for me to explain, but fundamentally, it's not necessarily treated as a dividend, but it's the rental return nonetheless.
So it comes to me as a regular cash flow in addition to
Yes,
whatever the
it
cash
comes to
flow.
you as regular cash flow. Yeah, if that is the question, yes, absolutely right. It comes to you as a regular cash flow. And that's why it helps you build the conviction that at some point in time, your 10 to 12% IRR will work out.
Got that. Got that. All right, cool. I just thought of it, so I just thought of
Yeah.
just jumped in. All right, Medha, anything else?
No, I think that's it. Thank you so much, Avinash, for your time. We went way, way over time, but it
Yeah.
was a very interesting conversation. So thank you for being with us for the last over an hour now.
No, no problem. I had to look at my watch to realize that it was over an hour. So it's been very informative and very intriguing. So thank you for your time, and thank you for having me on your show. I love the interaction. So hopefully we can do more. Look forward to it.
Absolutely. Absolutely. Thank you, Avinash. Have a good
Okay.
night. Bye bye.
Okay. Good night to all of you. Bye bye. Thank you.
Thanks, everyone. Bye bye.